Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about new home sales and also how recent remarks from the Treasury Secretary could help the bond market and mortgage rates. Before we dive in, I want to thank our sponsor, Rocket Close, for making this episode possible. Logan, welcome back to the podcast on this special Memorial Day episode.
Yes, we made it through Memorial Day in 2025.
Listen,
Yippee-ki-yay!
that's saying a lot. That's saying a lot this year. We have so much to talk about. Let's start with what
By the way, you got a lot of love for singing "Eat It" in the last podcast.
Yes. Thank you for everyone who is very nice to me about that. I actually do think I know so many lyrics from Weird Al songs, but that took me back. So, appreciate everybody with their support. That is hilarious.
See, you got Weird Al, I got Shy, it's we got our own little culture vibes here.
You are definitely way better at that. Oh my gosh. So we are recording this on Friday morning, and lots of things happen Friday morning and Thursday night. So first thing, let's talk about that existing home sales report.
Well, actually, it's the new home sales report.
Oh, yep, you're right.
And the headline, it's actually very true. New home sales report beat estimates, and it's at the highest print in years.
Wow.
So, of course, everyone's like, what? Wait a second. The builder's confidence is not that far from COVID, and the new home sales just, the last time it was this high was actually in 2022 when sales were falling. So, of course, we got to try to explain everything. It's a very complicated story, but if you actually look at new home sales, you broaden it out to 2022, it just basically ebbs and flows back and forth. It's in a very small range. And one thing I've come accustomed to realize is that not a lot of people know that the new home sales market has its own purchase application data. And that purchase application data has been showing positive year over year and month to month growth. Nothing spectacular or anything like that, but still, if you took what the Mortgage Banking Association did with their purchase application data, they were looking for 724,000. So everyone has different estimates out there. The last 3 months have been revised lower, which is really showing the trend is actually not as strong as the headline. And this number will probably be revised lower. And it's just basically kind of the same story. And we always have to remember that the builders' confidence index is tied to more smaller builders, not the big publicly traded builders. So the big publicly traded builders' balance sheets look a lot better. Their corporate profits are a little bit better. So they have levers to pull. And it's not like new home sales is working from 1 million, which was the peak during COVID, or 1.4 million, like we saw at the peak of 2005. They're just basically managing. We have sales going back and forth. Now, if new home sales broke above 800,000 and it was growing, that's a legit breakout in sales. But here, it just looks like to me the same story. When rates go lower, they can sell a little bit more homes. And then when rates go up, really the builders' new home sales data really gets hit when rates get 7.25 and above. But we're just hovering. And because they live in a sub 6% mortgage market world, at least the big publicly traded, they can still move a lot of product when needed. But, we made that case that single family permits have probably peaked for the decade unless rates fall. So it's a complicated headline. I know a lot of people are confused. My Wall Street friends are like, what's going on? And no. The surveys were all really bad, but just look at it in the context of the last few years. And always remember, if you look at rates when they get above 7.25 is really when the builder's sales data starts to fall. And then when it comes down a little bit, it picks up, and really just, we don't go anywhere. Kind of like the existing home sales market. We have when rates fall, demand picks up. When rates go up, demand fades. Here, it's working from a higher level, 2019 levels. If the existing home sales market had a comparable level, you're at 5 million existing home sales easily. So that's why the builders are just up there. They're a smaller marketplace. We're talking 743,000 homes versus 4 million in the existing home sales market. But advantage, disadvantage to a degree still. If they could still offer sub 6% mortgage rates, millions of people buy homes every day. So it's a supply and margin issue to some extent, that now as inventory grows, if they have to start cutting more prices and rates, the profit margins go down. This is why you don't see building permits, single family permits grow anymore. We're starting to complete the old units, and we're kind of stuck. So I know the headline could be confusing, but when we wrote that article, we tried to explain it.
So I want to dig in a little bit on, so you just mentioned it, and you just mentioned it on our last podcast too, where you're like, we've seen the peak for home building for a decade. And let's dig into that a little bit, because that doesn't seem like good news.
No, I mean, unlike the last decade was like working from the lowest levels ever, and it was the weakest new home sales. So for those that followed my work in the last decade, I was like, we are never going to get to 1.5 million housing starts until years 2020 to 2024, because new home sales won't warrant it. You need, oddly enough, oh my God, now that I think about this, I was always saying you need new home sales to get above 743,000 to get 1.5 million starts. And that back then that looked like very attainable, but I said, no, that's going to be a year's 2020 to 2024 story. So we're here again at this level. The builders completed units of sale. That's their main thing. It's around 120,000. That's like the normal level of the peak of many, many cycles in the past. So smaller builders, disadvantaged, big publicly traded builders have a little bit better backdrop. But in this environment, unless you're growing sales, unless rates are lower, this is the reason why just permits in general are at recession levels still. And it's been here for years. So it's odd, right? You always account to an economic expansion in America as permits rising. That's always a leading indicator. And yet we've had the economy expand with permits basically at early COVID-19 recession level. So unless rates fall, there's no motivation or financial motive for them to start, piling in on permits, why they still have the backlog. And I think that's the thing, is that they still have a basically near all-time high backlog of orders of homes that haven't even started yet. So they're just managing, right? They're efficient sellers, as I call them. They're just managing and make sure they could get it, by the time the home is built and ready to go, they could sell it. And this way you avoid, or you don't deal with huge cancellation rates or anything like that. That will hurt your margins even more.
Okay, but why is then this the peak for the whole next decade? Mortgage rates could go
It's
down.
2020, it's 2025. You only got 5 years left, and single family permits were already at an elevated level post COVID. So unless rates fall, there's no reason for permits to really grow. So that's the
But
reason. Now, if mortgage rates fell and were lower for longer and demand picked up, yeah, you can get permits growing again. We've seen that happen before, but for now, there's just too much completed units of sale and margin pressure for them to let's go for it.
Okay, so that's clarifying. So the rest of this decade, not for the next 10 years, but like for the
Not
next
in the
5.
next 10 years, just the rest of this decade. Yeah.
Okay. And you see that, like, even if mortgage rates fall, if they have a backlog, then, we're just
Well, if mortgage rates fall and builders' confidence picks up and they start to grow new home sales, Sarah, shockingly enough, they build homes. Even with labor constraints and all these other things, they somehow build homes.
But that's why I was confused for you to say, like, well, this is the peak. I'm like, well, don't we expect mortgage rates to fall sometime in the next 5 years?
Well, I know, but it's been a few years now that permits aren't growing, and it's one of the more confusing economic expansion data lines that we have, because we're always trained to think permits are a leading indicator of an expanding economy. This is an expansion that has happened now while existing home sales have been in a recession since June 16th, 2022, 5:31 p.m. We remember that call.
Yes.
The new home sales market isn't necessarily growing with permits or anything like that, but it's a very unique cycle. It's confused so many people, but if you want to realize why residential construction workers haven't fallen, it's really because of this. And also it's that sector is very tied to the remodeling business around the world or around the country.
Okay, so then other news on Friday morning, we had Secretary Bessent talk about changing some rules that relate to bonds. This is a little bit out of my league. Let me ask you to explain exactly what happened there.
Okay, for first, outside of Weird Al, what other 80s songs can you sing or know the words to?
I know the words to every Journey song, guaranteed.
Journey song? Journey's
Yes,
just legendary, right? You could
you
just like
too, absolutely. Even the B-sides, I could do all those. Bruce Springsteen, most of them. Just the classics. That's what
the
I'd say.
classics.
Weird
Okay.
Al, you know.
Weird Al, Bruce Springsteen, the classics. There you go. Wait, who's the comedian that smashed watermelons?
That was oh my gosh, Gallagher. That was Gallagher.
Gallagher. Is Gallagher still alive?
No idea. I'm not people who are like, so our producer Alyssa listening to this is like, I know she has no idea who Gallagher is. That is old school for real.
Who when I think of the 80s, I still think of come on, come on, come on, come on, come on, chameleon. You come
Okay.
and go. You come and
Culture Club, right up there,
go.
absolutely.
Absolutely. Duran Duran, MTV videos, those are the
Yes.
days. So one of the things that I thought Bessent should have done, or the White House should have done, is that they should have changed this SLR rules early on. If they were so adamant about the 10-year yield going lower, you want to give yourself the best backdrop possible. Now, I don't know logistically or legally they could have got it done faster, but what this basically is they're going to allow um, financial institution banks, firms to hold more treasuries, and they believe that can create more liquidity in the market, and you could get more buyers in, because right now technically you're limited. So Friday morning, a lot of action on Friday morning from the White House, but he talked about summer. So in the summer is going to be the time frame where the SLR, and for everyone in the mortgage industry or real estate, this is kind of a big deal because they're really counting on this to create a little bit more calmness in the bond market. But it'll be summer when the rules change. So
Okay, so
pretty
summer is
soon.
officially now, right? I mean,
Yeah,
like,
so pretty soon. I didn't see an exact date. That's like an important story. I thought they should have done this early, but maybe legally they couldn't have got it done. But that'll create more buyers or more holders of the 10-year yield, and of course it's Friday morning. I woke up to President Trump putting tariffs on Apple, and can't build iPhones in India, but you got to bring it to Indiana. By the way, we are going to Indiana again. That is going to be great. We had a lot of fun in Indiana last time
yes, we
when
did.
we spoke.
Absolutely. Okay,
Yeah,
so
absolutely.
it wasn't just Apple, it was 50% tariffs on EU, correct?
On the EU, yeah. Trump just doesn't like Europe. Just doesn't like, you know, it's Europe. You think about Europe and the VAT tax and everything, and what they do over there, but here is this revolutionary AI that here in America we're pushing, and everywhere else. But then Europe is like, I think, do they still have Nokia there? Right? I mean,
I'm sure they do.
does Europe create anything that's like you know energetic or passionate or anything? Like great
Ah,
food, great visiting thing, but when you think of Europe, you just think so. In any case, Trumpy got mad again. It's probably bored. It's right before the holiday weekend, and the stock market is up. So he's thinking, okay, let's go for it. So which probably means that the conversation with Europe, the trade deal with Europe, isn't going as well as he. So again, you should kind of show your hand when you do this. So we haven't had deals with Japan yet. We haven't had other deals, but he's put in 9 days, we're going to get a 50% tariff on Europe. So what happened is the 10-year yield fell in the morning. So all of a sudden, the bond market, which was petrified because of the budget, the vigilantes are here. Now the 10-year yield was down like at 1 point 20 basis points from the recent high. And again, if the labor market is still firm and holding up. 4.35 to 470 is acceptable area, right? So bond yields fell, mortgage pricing fell on Friday off of it. But again, yeah, so some interesting fireworks before the holiday. And it looks like Trump's going to get that tax bill signed, and just wanted to throw a few fire bombs out there before the weekend.
Absolutely, and we expect more to come. We're, as a newsroom, we're always looking throughout a holiday weekend. That doesn't mean anything to the White House. It might be Saturday night, it might be Sunday morning. You never know. So we're always watching. So if you're out there, you're in real estate or mortgage, you've got these competing things. You're like, okay, we're going to allow more people invest in the bond market, so that might drive things down a few points. You have continuing trade war craziness going on that might drive it up. Like, what should people expect?
Well, let's look at what happened this year. The 10-year yield got to a level that I did not think it should have got to, but the trade war, the markets believed the trade war was recessionary, so it drove bond yields lower. And then it was, a face-ripping reversal. So that was chaos. If you take the chaos out of the equation, right, the 10-year yield, just look at it in the last few years, looks pretty normal, just in a channel. That's why we do channel forecasting every single year, because things go in ranges. We don't do, let's talk about a mortgage rate once every 4 months and then that's it. No, we
Right.
want to teach people that that the whole slow dance was designed to teach people that, okay, it's really Fed policy and what drives the 10-year yield, economic expectations of economic growth, inflation expectations, and Fed policy. So we're just hovering back and forth and take the drama out. But you could clearly see if the market really thought recession was coming, they still have the ability to send bond yields lower. And we all know debt's coming, and there's no difference out there. So hopefully this week brought some common sense into that, because we had some really, and I know there's people want to highlight stuff and get people to click, but our debt to GDP has been rising for so many years, and our debt has been rising. Our deficits have been, and rates were so much higher before when it wasn't. So a little bit more perspective, and I think that this was a good week in that sense to bring some reality back into the conversation.
When's the next Jobs Friday, so that if we're looking for the labor data to maybe tell us something?
The Jobs Week isn't next week, or the BLS Jobs Friday. It's the following week, because I think May 30th is on a Friday. So June 6th is the Labor Week, and of course, labor over inflation. Jobless claims still the fastest data line to give us a head start. And for those that, one of the things I do now on social media is I show the jobless claims for federal workers, and that's been falling down, after this big spike. That data line is moving lower. It's nowhere back to where it used to be, but there's a clear, the firing of federal workers have stopped. And if they found jobs or not, there's ways to track that continuing claims. But so we're whatever Jobs Week happens, it's very critical. But again, we always have a labor report every week, every Thursday, with the jobless claims data.
Well, I was thinking by June 6th, maybe some of that data that we're looking for as far as, layoffs and other impacts might be showing up there. On the other hand, I don't know, how long it's going to take.
Here's the interesting thing. In 2024, the labor data was noticeably slowing down, but for me, it just got to my forecast. So I always have a different take than everybody. I was like, okay, I was the guy that was wrong for all this long, but I said, okay, maybe I could get my revisions and then we could get back down. So the labor data so far looks perfectly normal to me. It really depends on what people perceive the job market is. And so far this year, the monthly creation numbers were between 133 and 151,000. That's what I was looking for. We're at 147,000 per month. So the labor market, I just naturally see the progression of jobs data getting lower as population growth slows and the expansion is longer. It's really hard to get big job prints anymore. In this case, the labor data stabilized, right? It went from, it's a softer labor market by a lot of fronts, but it also stabilized. So if jobs data, if we start trending below 133,000 per month, then yeah, you got something, especially if it goes sub 100,000. But for now, it's stable. For now, the jobless claims data is not at recent lows, but not breaking out either. And again, everyone's kind of said, what can make the Fed move? It's the labor market. Now, of course, we had the ruling that the Supreme Court, Trump has authority over firing a lot of individuals, but the Federal Reserve, or the Fed, or at least Powell, is protected because it's a quasi first or second American bank, which drove everyone nuts on X. Everybody had to give their take on it. But we went with the approach of if he's not happy, you can't probably fire him, but he could do a shadow bank or shadow Fed president. And whoever X is for him, that person to come on and say, don't worry, when I'm there, we're going to cut rates. Whatever it is, that the whole shadow bank that Bessent talked about before Trump won, this would be the backdrop for it. Now that the Supreme Court said, no mas, you can't touch Powell, right? So this is something to think about going out in the future. If things don't go the White House's way, do they bring out the shadow Fed president? The Shadow was a movie in the 80s or 90s.
I think that's older. So
the Shadow, the Shadow's an old comic, but there was a movie. I think one of the Baldwins actually did it.
that would make sense. So this Supreme Court ruling was really interesting because they did say that President Trump can fire the heads of independent agencies, and then they did a carve out for the Federal Reserve. So they were very specifically like, don't touch Jerome Powell, right? Because I think most people feel like they don't want to crash the market. They don't want that to happen. And there's more at stake with the Federal Reserve.
That's what Turkey does. Turkey, like every time they raise rates there, they like, it's not like, like Russia throws its people outside of windows. Turkey just like fires them, like comes and escorts them out, So I think there was always this rule that you can't, the sitting Fed chair is off limits just for that, because, a politician might want rates to go lower than it should be just to help the economy. Whatever you agree or disagree, that's the Supreme Court just kind of wanted to have kind of a buffer there, which, maybe 5-10 years in line, I still think they left a little wiggle room that maybe they can. But in any case, for now, the shadow Fed president is still in play more than Trump firing Powell now. And, Trump said it himself. I think, he was advised that, hey, you're not going to be able to fire Powell. But he said, why do I want to fire him? I'm going to replace him soon. So 2026, Powell's gone. He's probably like, thank you, get me out of here. And then if he does do the shadow Fed president, if that does occur, this is just a theory. If it doesn't, we won't talk about it. But then we can go into the dynamics of what a shadow Fed president can do. I think Bessent talked about this in October of 2024.
It'll be really interesting to see. I know we're going to keep a close eye on that. Okay, anything else? It was such a crazy Friday. Anything else you want to talk about?
No, it's a holiday weekend, and usually the tracker gets impacted the following week because people want to go on vacation and do stuff. Not everyone's on board on buying and selling, and so it could distort the weekly data as much. But hopefully the tracker does kind of the same story as we see. It'll be interesting because our monthly pending sales is finally showing positive growth, and like I've talked about before, June and October existing home sales were all under 4 million last year, and then rates fell, and then sales picked up a little bit toward the end of the year, and total existing home sales finished above 4 million. So we're going to have some, again, real easy comps from June. So we have one more existing home sales report that will have a above 4 million comp to work with from 2024. But after that, it's the mother of low bars, man. It is just really rare from 1996 to now to have any monthly existing home sales period under 4 million, but we're going to have a few months just a tad under 4 million. And if sales trends just stay the same, you're going to have like 5 months of year-over-year growth, but just put it in context. And we'll see how the tracker sales data looks like this week.
Amazing. Well, Logan, I hope you have fun on this Memorial Day weekend, listening to your 90s throwback songs or whatever it is that you do. Let's see, looking at charts, barbecuing maybe?
Look at charts, getting ready for football season. What's interesting about data, which we love. We are getting so many good questions on Instagram stories. Before I leave, every Friday on Instagram, you go to the story section, ask me anything. Okay. And just remember the hair questions, that's fine, but this is genetics more than anything else. But also, the questions have been getting better and better, and more people are learning. This is why I do it, because if I'm doing my job right, this is the old coach of me. People start to learn, and then they could talk about the bond market, and they could talk about economics. And then this is like the most beautiful thing, like to see what the questions were when they first started to what they are now. Come to Friday, ask me anything. I'll give a video response. And it's gone very well, especially this year where we were averaging like over 1 million people coming to the Instagram account a month.
Yeah, it's crazy. Those are great questions. They're very popular. I shudder to think some of the questions you get that you don't put on there. But the ones
everything's
you
interesting,
very entertaining. Logan, thank you so much, and we will talk to you again soon.